Just at KB Financial Group. Peter, thanks so much for your time today. And as I alluded to there were a few concerns earlier this week about the strength of the global AI rally. And then we got the Micron earnings, SK Hynix's announcement today about its US listing plans. Confident to say that these concerns have been erased?
For now, I mean, the price movement on the whole sector has been so fierce. We're all scrambling to really get a quick gauge on exactly what the price expectation and what is embedded in the price. But certainly the Micron earnings is very, very consistent with our thesis that as much as it's been a fierce rally, it is backed by earnings and fundamentals, and the valuations are still reasonable.
To what degree can we say that this lesson has been reinforced when it comes to AI? Just buy the dips.
At some point, that game is going to be over. But I think the transfer of wealth coming from the cashed-out hyperscalers, putting these massive orders in, not only massive orders, but real earnings visibility that is providing for the semiconductor players is something that I don't think we've seen even during the TMT crisis.
Can you see a scenario where these hyperscalers eventually build out their own memory chips and cut out, the middlemen, as it were, in South Korea? Or are you looking for some other catalyst that might say to you, yeah, this rally's over?
Yeah, well, there's always going to be an attempt to try to have the second, third, fourth players. I mean, we've seen Chinese catch up on technologies everywhere, much, much quicker than anyone expected. So we can never say it will never happen. However, the evolution of the semiconductors, how each cycle you have the leaders becoming stronger and the secondary players exit the industry is sort of the part of the semiconductor industry's law. So I do foresee at some point that the Hynix and Samsung, probably maybe Micron, could take up the very high margin, cutting edge part of the segment, whereas the other players will come in and take more the commodity end, which would be your mobile phones and your PCs. But even that would take 2-3 years, because that's how long it takes for these capex to come online. As far as the AI, any warning signals, past the week, there's been some concerns about the funding of these AI hyperscalers and whether they will actually eventually make reasonable, sustainable earnings. I think that's still about a year or two away. So I do think that visibility that semiconductor producers have on their earnings is very, very compelling.
Specific to the SK Hynix announcement of the US listing, do you feel, well, on the surface, this is obviously a move to access a deeper pool of dollar liquidity, but at the same time, do you feel like it's a defensive play against US trade protectionism?
There might be a couple of steps further away. You can see that everyone in the AI space are hurriedly trying to raise money, and maybe it is a signal that they are concerned about the funding environment maybe a year or two away. But certainly in terms of protectionism, I do worry a little bit about that. You have 3 companies essentially cornering the entire AI chip market. I think maybe there would be some concerns of protectionism, but to put barriers up for a scarce commodity whose prices are rising so fast, I think it's really securing the inventory rather than actually trying to make it into some sort of a nationalistic issue.
I know you've previously made a connection between the spike that we see in the VIX, the big run-up that we see in the Kospi as well, that this perhaps signals some investors are buying on the basis of fear of missing out. But when retail investors start behaving this way, that's usually a signal that we're getting near the top. Is that a fair assessment?
That's exactly what happened during TMT bubble. However, as I mentioned earlier, this is a very rare case of retail investors chasing a very handful of stocks whose balance sheets are very strong, backed by earnings, and whose orders are coming through with visibility of 1 or 2 years out. So in this case, as much as price action looks like it's a bubble, I do think that we probably maybe halfway through this cycle gives us plenty of leeway for the expectation to surpass eventually of the fundamentals.
Is there another threat to consider as well? And we perhaps had a taste of this earlier this year, and that is labour friction, industrial disputes. Is this something we might see more of at SK Hynix and Samsung?
Well, for this year, it's discussion's over, but they've already trying to establish some sort of a profit share scheme for next year and so forth. I think the concern is that other Korean companies might follow their leadership on the collective bargaining and to try to establish such a scheme, which would actually put a bit of a burden on the labor flexibility. And when you consider that the AI and important part of that AI transition would be that labor flexibility, and countries whose labor can be adaptable would be the one to win. And in Korea, it seems like they're going the other way. So that's definitely a concern. But again, the earnings in these companies are so powerful that for now it's becoming a secondary consideration. When the cycle leaves the top or maybe even in decline, I'm sure we'll have to talk about it a lot more seriously.
Peter, before we let you go, I'm going to ask you for 3 price targets. So I'm wondering if you can give me a year-end target for the KOSPI, one for SK Hynix, and one for Samsung as well.
Well, all 3 is essentially the same question because those 2 sectors take up more than 50%. So I'll just finish with, I feel pretty comfortable with a KOSPI target of 10,000. And that will probably mean that both Samsung and Hynix has a comfortable 30% upside from here.
All right, Peter Kim, Global Investment Strategist at KB Financial Group. Thanks so much for your analysis today. And we have more ahead as well.